and then I'll show you how to send that to us. It should send you a link and you just forward that link to me.
Awesome. It's recording.
Okay. Okay.
All right.
All right. Okay. Well, it's my pleasure to introduce to you Christy Tremino, who is a Bank of America specialist, and she will be talking to you today, Southwest Senior High School students, about savings, financial literacy, money management, all that good stuff. Christy, go ahead and take it away.
Thank you. Hi, good morning. Again, my name is Christy Tremino. I'm a financial center manager at Bank of America. It's really a pleasure to be here with you guys today because this is such an important lesson. I wish I would have had the opportunity to take a class like this when I was in high school. So take notes, ask questions. Remember, there's no bad questions, so stay engaged and then follow up with the resources that we're going to give you so you can keep learning more about it, because this is like one of the most important lessons you're going to have. And just to jump on that, actually, when asked 5,000 18 to 24-year-olds were asked what high school level course is most important to you, would benefit you the most, like in your everyday life, they actually said money management. So take advantage of the course because this is something that you're going to use in your everyday life. So money management, it's a skill. It requires practice like everything else. So you need to learn it, you need to practice it, and then you need to set up a plan for yourself so that it actually works for you. We're going to go over some basic things. Basic banking is going to be the first thing that we're going to start with. We're going to move into credit, saving money, managing your everyday expenses. So is there any particular topic that you are interested in that you want me to cover? Any questions so far? We're good? Okay, remember, don't be shy. Let's go to banking basics. You want to do banking? Okay, so we're gonna start from the very beginning. So banking basics. So why would you put your money in the bank instead of just having it in your house or, in a safe somewhere? So there's many benefits to having a bank account. So basically what the bank does is that we just hold your money. We hold your money and we teach you how to manage it, but then the rest is up to you. So some reasons to have your money in the bank is safety. Remember that whenever you have your money in the bank, it's insured. We take care of it for you. We help you manage it. You're not going to lose it. So if you have your money in your pocket, something happens, you drop it, it's gone. So that's one of the things. The second reason to have your money in the bank would be for savings. You can earn perks here and there, or you can earn interest. And it gets you into a better habit, which we're going to talk about later on. Aside from that, it's convenient. So like I said, instead of having cash and having to manage that money, we give you access tools like debit card, online banking, so you can manage your money in a more convenient way. We have ATMs wherever you go. You can pay with your card. So there's different tools that we have. And then we record your transactions. So I don't know if this has happened to you, but sometimes I have money in my pocket and I'm like, okay, well, I had this. What did I spend it on? Well, you don't have to worry about that when you have your money in the bank, because we record all of your transactions and you can see a record of everything that you've spent your money on. So then you can tweak things here and there so you can manage it better in the future. Any questions so far? Okay, so as a financial institution, like I said, we're responsible for holding your money. So we take deposits from customers like yourself. And then the bank, what it does is that it turns it into loans. So that's how the bank makes their profits. So let's say the bank pays you 1% on a savings account. That's just a random number. And then we lend out that money at 3%. So you see, that's where the difference is. So that's what's in it for the bank. What's in it for you is that, like I said, you have your money that's insured. Aside from the fact that there's branches wherever you go, and you're building a relationship with the bank. So in the future, when you have more complex needs, like buying a car, buying a house, then you know where to go, because we're your home bank and we have your relationship. So that's the convenience. So the next slide. Okay, so that's what we talked about, which is how the bank works, right? We take your deposit, we turn it, we pay you a certain interest rate, or we give you perks for having the money in the bank. And then we, in turn, go ahead and we lend it out and we charge interest. So either you earn interest or you pay interest, depending on how you're using the bank to work for you. Okay, so why would you choose a bank that's right for you? So some of the things that you would take into consideration is the bank location. Bank location is key. You know, it drives convenience for you. So you want to make sure that you select a bank that's close to where you are, that you can get to, that has multiple locations, ATMs, and easy ways for you to access your money. Online banking. Online banking is really the way to go. As you see now, this is my first experience with Zoom, but everything is Zoom, everything is virtual. So online banking is key to managing your money. Mobile banking, you have the bank right in the palm of your hands. So like I was telling you, I'm a financial center manager. We have people walking in to ask questions about their accounts or to get financial advice. The information that I see on my screen is actually available to you when you have a bank account through online banking and through mobile banking. So any questions that you have, you can just look it up yourself without having to make the trip to the bank. ATM access. You want to get into the habit of using your debit card to make your purchases, but if for any reason you need cash, you can go to any ATM and withdraw cash, or you can make deposits, you can make payments. There's so many things that you could do at the ATM now. So you want to make sure that when you're choosing your bank, you have accessible ATMs wherever you go. And then for you specifically as students, one of the key factors to selecting your bank should be the bank that gives you the most perks as a student, or the easiest way to bank, meaning avoiding fees, accessibility, the types of accounts that work for you. Next one.
Oh, I'm sorry, I have a question.
Yes.
What if like you have more, like if you have more than one account in different, like if you have more than one account but like in different banks, like Bank of America or use Wells Fargo, like
You can, and you know, it's always good to look at the different options that you have. So there's many clients who bank with multiple places. So the good thing that you have nowadays, because there's no limit to how many banks you can have or how many accounts, as long as you can manage them. Because remember what I told you before, the bank is the institution that holds your money, but you're the one that manages it. So for example, I'll give you my case. My mom banks at, let's say, Wells Fargo. I bank at Bank of America. So I do have a joint account with her at Wells Fargo, but my primary bank is Bank of America. So it can be done as long as you can manage it. And many people do it because they have accounts for different purposes. Thank you for the question. Anyone else? Any other questions? No? Okay. So let's get into the different types of checking and savings account. So the basic difference. The account that you want to use for your everyday expenses, so for your lunch, gas, whatever bills, your cell phone bills, that's your checking account. So that's the account that you're moving every day. With the checking account, you can write checks, which no one writes checks anymore, but you can, that's an option. So you write out a paper and then they take it to the bank or they deposit it and they can cash it against your account. With the checking account, you have unlimited transactions. So since it's the account that's used for your everyday expenses, you can have a debit card, which you can go into CVS, you can go into Publix, any store, and you pay with that card and it comes out of the money that you have in your account. You can go to ATMs to withdraw cash or to make deposits. You can transfer money. So to her question, if I have an account with Bank of America and my friend has an account with Wells Fargo, it actually lets you transfer between accounts. So it's an account that you use every day and you could use it all day long. And that's where you want to go ahead and track your transactions and manage your spending. Then you have a savings account. So the savings account is the one that you want to forget about. That's where you pay yourself. So whatever extra money you have, or if you have a certain goal that you want to save, that's the money that you put into your savings account. It is accessible in case of an emergency, but that's how you want to think about it. I will only touch that money if I have an emergency. because there is a limit to the withdrawals. And really the purpose is for you to save for something, you know, it's not like for your everyday expenses. So to give you an example, let's say I have $100 and I'm going to need $70 for my everyday expenses or whatever else. So I have 30 extra dollars that I don't want to touch. I want to forget about it. So that's the money that would go into your savings. 70 into your checking for your expenses, 30 into your savings. Questions about that? Does anyone want to know how many times you can tap into the savings? Okay, this is very important because it depends on how you do it. But just to give you like a rule of thumb, it's really 6 times that you can dip into your savings. So like I said, that's the account that you definitely don't want to touch. So be aggressive when it comes to how much money you want to put aside. But limit the number of transactions. That's not like the play money. That's not your lunch money. That's the money that you're setting aside for something special. Because if you do exceed the transactions, the bank can charge you fees, and the fees are hefty. So, you know, you want to manage the bank in a way that they're holding your money and it's working for you, but you're not ending up paying all these fees because you're not managing the account right. So, like I said, checking, everyday expenses, savings, that's the money you're putting aside. Questions before we move to the next slide? Okay. Go to the next one, Tom. So how do you choose the account that's right for you, right? We talked about student offers. So especially when you're young, you know, the bank knows that you're on a limited budget. So what we want to do is we want to make sure that you establish a relationship that's easy for you to manage. So many banks are going to have special deals where you save money on fees, and we reduce the amount of money that you need to open an account. So to give you an example, you usually, let's say, need $100 to open a checking account. Maybe you could do it with 25 because you're a student. Account balances. The bank might waive the balance requirements to have your account because you're a student. So instead of having to pay the bank a monthly fee to have that account, we just don't charge you, and we give you that waiver for a certain period of time. So it depends on the bank, but those are questions that you definitely want to ask. The other thing is fees. So let's say the bank tells you, I'm not going to charge you monthly service fees, but what other fees could there be? So that's something that when you're opening your account, you want to make sure that you ask and that you read the information that's sent to you. So no monthly service fee, but that doesn't mean that there aren't any other fees that could be involved. So for an example, I have my ATM card and I can't find the Bank of America anywhere. So I decide to go to Publix and withdraw $100. So the Publix machine charges me for using their machine, and Bank of America charges me for using an outside vendor. How safe would it be to use a debit card to make I didn't get the rest of the question. Tanya, did you read that question? How safe would it be to?
How safe is it to use a debit card to make an online purchase?
Making purchases with your debit card is actually very safe as long as you're monitoring your account, because the bank does insure you and it protects you from fraud. But there's a catch to it. You have to make sure that you're reporting it. So we go back to the same thing. The bank is holding your money, but you're managing your account. So you make an online purchase and then you notice that there's fraudulent transactions after that. At that point, it's your responsibility to contact the bank and let them know that this was not you. So the bank would go ahead and block your card and send you a new one, and then we'll do an investigation to make sure that you get your money back. So it's extremely safe to use your debit card. Any cards that you use related to banking are extremely safe, but you have to do your part. So make sure that you report things. Make sure that you keep your card numbers confidential, that you don't share your PIN numbers with your friends. So there's certain responsibilities that you have as the client to be able to do this. But it's very safe. Any other questions?
Is there a limit to how negative your account can go on a debit card?
Well, what you want to do, the main thing that you want to do is make sure that your account doesn't go negative. So know how much money you have, so then that way you can determine how much you can spend. So that's what an overdraft fee is. So if you see it on the slide, exactly what you're asking me about is the penalty that the bank can charge you. So depending on how your bank works, you have to make sure that you ask whether they'll let you overdraft or not. I would tell you, especially with your first account, to let the bank know that you don't want to be able to overdraw your account. Because overdraft fees, they vary, but it's around $35, which is a lot. It's a lot of money. Nobody wants to pay a bank $35 for overspending. So if you have $100, that's all the money that you have to spend. But if you go ahead and you make a purchase, just to give you an example, you go to a restaurant and the restaurant is $20 and you only had $15 in your account. Let's say that transaction goes through. So now you're negative. What the bank will pay it and they'll honor your purchase because you don't want to go through the embarrassment of not being able to pay the bill. But at the same time, you charge the penalty. And that penalty is more than what you actually spent, $35. So what you want to do is make sure that you're always managing your account. You know exactly how much you have so you don't run into those situations and end up paying fees. And then it also affects the relationship that you have with the bank, So in the future, when you do need something that's more important, it might get in the way. But that's a really good question. Thank you for asking. Any other questions? Does having a bank account with... Okay, does having a bank account help with? I can't hear you.
Does having a bank account with a particular bank helping getting a credit card approved from that bank in the future?
It could. Now, the products are independent. You can have a credit card with one bank and not have a relationship with them. Now, what happens is that, especially when it comes down to your first credit card, the bank doesn't have any information to go by other than the relationship that you have. So sometimes it does help that you apply for a credit card with your primary bank. That's the bank that knows you. So it could help, yes. Any other questions? This is a really good class. You guys have very good questions. You should be proud. Okay, next one. Okay, so you have different ways to pay for your expenses. So one thing is cash, right? So when I was your age, I remember that my mom would give me $40 and I would put $20 in one pocket and $20 in the other. So the $20 that I had in one pocket, I knew that was my spending money. And the other $20 was the money that I wanted to save. You don't want to do that. It's a different time now. So now you could still use cash. Sometimes it's good to have cash here and there. But what happens with cash is that if it gets stolen, it's gone. There's no way of replacing it. So instead of using cash, you could use your debit card. So it's still the money that you have in your account. Your debit card is only pulling from the money that you have in your checking account. So you pay for things directly using the card. You could make purchases online. You can make purchases at any store. You could use it at ATMs. The other way of paying is a digital wallet. So once you have your online banking, your mobile banking set up, you can actually add your debit cards to your mobile wallet. And there's a lot of places like CVS where you just tap and go. So it's like having the debit card set up on your phone. And then the other way is credit. So that's in the future. Once you build a relationship, you can apply for credit cards and basically the bank is giving you a loan. So let's say the bank says, okay, I can trust you with $500. So here's a card. That's the maximum that you can spend. And then you can pay me back either at once or you can pay back little by little. So remember, your debit card is the one that goes from your checking account. And then also your and then your credit card is actually a loan. And both of these two cards, you can actually add them to your digital wallet and select in which way you want to pay. Next slide. Questions about that, about the different ways to pay? So do we have any questions about everything that we've talked about? So we've talked about the benefits of having a checking account or a banking relationship, how banks and interest rates work, and how to choose the right account that's the account that's right for you. Does anyone have an account already? So I'll tell you that if at this point you don't have an account, you might have an account because your parents maybe set up a savings account for you. But when you do open one at any point with whatever financial institution you go to, make sure that you come prepared with questions that you might want to ask, and read your disclosures, and make sure that you always ask questions. You know, you're there to buy. So whenever you're setting up a new relationship with the bank or with any institution, you want to make sure that you're asking every question so that you don't, you know, go home with doubts. Next slide.
Christy, just so you know, there's 2 worksheets that Crystal had sent. One is a planner and the other one is a financial planner and a savings planner. And I had sent that to Mr. Adao. So whenever you're ready, you can have them. Mr. Adao,
Yeah, if you want,
Yeah.
we could do that now, because now that we've gone over this, we can watch the video for managing money.
Okay,
And then and then the teacher can pass out the worksheet so they can have a better idea of how that works.
did you get my email, Mr. Adao, with the 2 worksheets? Mr. Adao,
Yes,
you're
I
on
did. I'm
mute.
gonna go ahead and distribute that. I did.
Okay,
I'm gonna
perfect.
distribute.
Thank you. Okay, Christy, which video shall I show?
Okay, so now we're gonna watch options for people who don't like to budget, because the next chapter, we're gonna go into how you can manage your money. So this video is gonna be very helpful, and so is the worksheet that your teacher is passing out.
Okay, should we show the whole 4-minute video? You tell me when to stop or what
Yeah.
you want to do. Yes? Okay,
Yeah, I think we have time. We have time.
okay.
And this
So
one's
give me,
important.
no problem. Give me a thumbs up if you can hear it. Ready?
Keeping a detailed budget
Can you hear
can be
it?
one of the best ways to
Oh,
help
you
you
can hear it.
save money and avoid overspending. But not everyone has the time or the desire to sit down with a spreadsheet on a regular basis. You may have even tried to keep a budget before, but it didn't work out. You're not alone. Fortunately, there are some ways you can manage your money without a traditional spreadsheet. Now, the most important part of managing your money is making sure your needs are covered. This will require a bit of math, but it doesn't need to be complicated. Start by figuring out all of your regular monthly expenses. This will be your regular bills, like rent or mortgage payments, all your utilities, insurance payments, and any other loan or credit card payments you make each month. Then, estimate your other necessary expenses, like what you spend per month on groceries and transportation costs. Add all these costs up and you've got your baseline, what you need to cover every month. When it comes to paying your regular bills, setting up alerts on a calendar can help to remind you to pay them a few days before they're due. Or to make it even easier, you can try automating some of your payments. You can sign up for automatic bill pay with your utility companies, lenders, and in some cases, even with your landlord. The amount you owe each month will be automatically withdrawn from your bank account or charged to your credit card. Automating payments can save you time and effort every month and help make sure your bills are paid on time. Just be sure you always have enough money available in your account to cover all of your automatic withdrawals. And if you use a credit card, make sure you can pay the balance in full each month in order to avoid paying interest on those charges. If you change your mind and decide that automatic payments aren't for you, you can always cancel your scheduled payments and go back to paying manually. Automatic payments can also be a great way to help you systematically pay down debt if you set up extra payments toward your loans. And they can help you grow your savings if you set up regular contributions to a savings account. This can be especially helpful if you've had trouble saving in the past. To help yourself prioritize saving, you can try thinking of saving as a bill you have to pay to yourself. Even if it's just a small amount, making automatic payments to yourself can help you build up an emergency fund or a retirement account. Once you've taken care of your regular bills and savings, you have a bit more flexibility with what's left. But if you find yourself overspending from month to month, you might want to try tracking your spending. One simple way of doing this is using the envelope method. While it might sound old-fashioned, putting a set amount of cash in envelopes each month for different purposes, like groceries, transportation, dining out, and just general spending money, can help you set limits on what you spend. So then, if you find yourself spending more than you had available in any of your envelopes, you might need to make adjustments the following month. Another way you can keep track of your spending with little effort is to use a single debit or credit card that can track and categorize your expenses for you. By keeping all of your purchases on one card, you'll only have one monthly statement that shows how much you've spent and where you spent it. So it can be easier to see where you might be overspending and how you might cut back. Plus, many banks now have online tools that can categorize your spending for you. So you'll be able to get an idea of what you spend on different things like entertainment, groceries, or dining out. Many banks also offer account alerts that will let you know when you've reached certain spending limits. If using a single card is too limiting, money management software or apps can help you link all of your accounts and automatically track your spending and saving for you. Many of these have even more detailed tools to help you analyze your spending, and they also have alerts that can warn you if you might be overspending in one category. And finally, if you feel like setting limits on your spending is a challenge, consider making one of your goals a small reward to yourself, whether it's a treat at the end of a long week or putting aside a little extra toward a large purchase you really want. Rewarding yourself might help you feel more motivated about managing your money, as long as it doesn't push you into overspending. While a detailed budget can be a great motivational tool to help you cut costs and reach your savings goals, it's not the only answer. As long as you pay attention to the basics, make sure your needs are covered, manage your debts and savings, and avoid overspending, you will be setting the groundwork for a more secure financial future.
Okay, awesome. Any feedback from the video, guys? Any questions? Okay, so let's talk about a couple of things that were reviewed on the video. So the envelope concept. It's kind of like the same thing that I was telling you about, where I had $20 in one pocket and $20 in the other, and sometimes that doesn't work. The envelope concept is good. And now if you end up having an account, you can use that envelope concept digitally, because now you know, okay, this is the money that I have to spend. This is the money that I'm saving. And then as you go and as you manage your transactions, you can see where you need to tweak things here and there. Another thing that they talked about, which is actually one of the questions that was asked, was multiple accounts versus one account. So am I using one card, or do I need to use multiple cards to manage my spending? What's easiest for me and what works, you know? So as long as it works for you, that's how you do it. Knowing how much you have and tracking your spending to avoid that danger zone of overspending. That's where your online banking, mobile banking comes in. So you set up alerts. What I do with my account is that I know what my danger zone is. So if I reach, let me just give you an example, $25, I want the bank to let me know that I only have $25, so that I know at this point, that's it. No more Starbucks, no more anything, you know, because I need to really, you know, get into control of the situation or move money around. So those are some of the things that we had talked about before that went into the video now. Any questions? Ask away, guys. Don't be shy. You can write it. No? Okay. Next slide. So know your income. Okay, so this is the most important thing. The key to financial success is knowing how much money you have. If we don't know how much money we have, we don't know how much we can spend. So this chart just gives you an idea of like the different income that you could receive. So for example, if you have an allowance, if you get gifts, tips, if you work as a server, have a part-time job, and wages. So wages is the money that you're earning from the work that you do. Okay, so the other things are basically money in your pocket. You know, you're not going to get taxed on your allowance or on gifts or on tips. But then if you look at your wages, if we go to the next slide, once you get a job, this is very important that you know how to read your paycheck, so you know how much you're actually making and how much you can spend. So the first thing is the concept of your gross pay. Your gross pay is how much money you actually make. So if you get $10 an hour, then that's your gross pay. But from that total amount, there's going to be expenses, because Uncle Sam needs to get, you know, their money. So everybody pays taxes. So you have your federal income tax, state income tax, Social Security, and Medicare. That's the first deduction. Then if you enroll for anything at work, whether it's health insurance, or you start saving for your retirement, which you should do early. So that's what your 401k would be, or any other deductions that they need to make. So you have your gross pay, which is your total amount, minus your deductions. And then you have number 4, which is your net pay. That's the money that you're actually taking home. and that's what you have to spend. So with your net pay is where you have to figure out, okay, how am I going to manage my expenses at this point? So the next one, know your expenses. Any questions about the paychecks or about deductions? No? Okay, so remember, gross pay, you never see that. What you need to focus on is your net pay. That's the money that you have to work with. So now we have to know your expenses. So it's always a good idea to write them down. So then basically at this point, you can come up with a plan. So I have my expenses. Let's say I have to pay my cell phone bill. So those are things that I need to do. That's where you differentiate between what you need and what you want, right? So cell phone bill, food, clothes, haircuts, just general living expenses. So you get that total. And then from there, so you'll see that example there, cell phone, entertainment, food, dining out, clothes, and haircuts. So these are the things that you can tweak. So maybe your cell phone bill is a steady bill so that you're not able to tweak. So let's say 1 month you made more money. So maybe you can spend a little bit more on snacks or dining out or entertainment, but you have to be able to differentiate between your fixed bills and the other items which you can tweak. So if this month I'm not able to really go out much, I have to cut my entertainment costs, or if I want to save more, I should cut my entertainment costs or spend less on snacks. So that's how you divvy up your expenses and then versus your income. So in the first example for January, you see that this person's expenses were $210. So in the bottom, that person's income was only $210 and their expenses were $210. So how much are they left with? We don't want to be in that situation, right? We're going to do things a little bit different so that we're not left with that zero difference. And so in February, the situation didn't get better. It became a little bit worse. So in February, if you look at the big difference is that this person spent a lot of money on clothes. So that month in February, they spent $100 on clothes, right? So that increases, that's the one that stands out. So that increases the expenses to $275 for that month. But how much was this person making? How much was this person making? So now we're in a negative status, right? I know one of you asked me about how much will the bank let you overdraft? So that's your example right there. So this person had $210 that they made and they spent $275. So now we're in a pickle. We have a difference of $65 and that difference doesn't go away, right? So now we're at a deficit of $65. So March is a little bit better, right? So that's, this is just an example. I'm not going to go over every month, but this is just an example of how you can tweak your expenses to modify how much you can actually have left. So March is totally a different situation. The person had in expenses $210. So they went back to their usual expenses, but their income was a little bit more. Now we have $310. So they have $100 left over. So this money can go into savings or into doing something special if you want to spend a little bit more on entertainment, or really you should just be putting that money away. Any questions about budgeting your expenses? Remember that participation grade. No?
Christy, I can also recommend that you can call on students. Feel free to use the participation list. We had discussed that yesterday. No problem if you do that.
Okay. Let me see. Okay, well, let's just move on to the next one. I'm sure that we're going to have some volunteers.
Okay.
Okay, so adjust your habits, right? So this is what we were talking about. The choices that you make, that is key into being able to manage your money effectively. Remember that this is the one investment that you make into yourself. So you tweak your behaviors to be able to have more money in your pocket or more money in savings. So snack, daily snack, $4, right? So if you do this daily versus 3 times a week, then how much would you actually be saving? So adjusting your behaviors. Maybe I can't afford to have a snack every day, or maybe I need to bring a snack from home, and instead of spending those $4 daily, let me just treat myself 3 times a week. So then that way I have more of a flexibility to be able to save. Or pizza and a movie, $12 weekly versus twice a month. So we adjust our entertainment and the extra money that we can spend to be able to save towards, you know, something special or just to have a cushion. So this is how you would go ahead and adjust it. And you'll see, like, people do this all the time. Sometimes you don't buy the brand name things, and then you buy something that costs a little bit less because it really just means more money in your pocket. And then in turn, you can make that money work for you, you know? Anyone can give me an example of some things that they've had to modify? Let's see. I don't want to call on anyone. So let's see who we have here. Alyssa, are you on the line? Alyssa or
Sorry,
Angelica?
I don't know that.
Yeah, miss?
Have you ever been able to modify any of your expenses to save for something special?
Yeah.
Tell me about it.
I just like when I got money, I just put like 20 or 40 aside and I just kept earning until I bought what I needed.
And how did you do that? Did you put it in the bank?
Yeah, I have a student account.
Oh, okay, good. So you're getting into the habit from now. Okay, perfect. Anyone else? Thank you so much for being brave. Okay, so let's go to the next one. Balancing wants and needs. Okay, so needs and wants, right? We all need shoes, right? We all need shoes to go to school. We need shoes to manage, but do we need the most expensive shoes? You know, that's a want. So those are the differences that you need to make. We need lunch, but do we need to go out to a fancy place to have lunch every day? So the way that you balance your needs and wants is that you need to make, you know, those needs a priority, and then you adjust to your wants. And then you really should just think about it. You know, sometimes I want this really nice purse, and then instead of just going out and buy it, I have to like give myself a day or two to really think about it and analyze that situation and see, okay, is this something that I really want? Does that happen to you guys ever? I'm sure it does. So based on that is whether is how you balance your expenses. So next one, how to get started saving. Are we there yet? Okay, Tanya. So then on this side, do we have any questions about managing money before we go into the next one? Because the next one is very important. Let's see if we call on someone. Okay, who can give me an example of, let's say something that we talked about? The difference between your wants and your needs. Let's call on someone here. Carlos, are you there? Carlos or Alex? Oh, okay. I see some students can't get in. Okay, so let's go into the savings aspect, right? How to get started with saving. So you have to think of savings as a way of paying yourself first, right? So we pay ourselves first because we should be the #1 priority. So instead of saying, okay, well, I'm going to manage my expenses so that I pay all my bills and then whatever I have left, I can save. So let's say I make $100, I can start from the beginning and saying, okay, well, I need to pay myself first. So I need to pay myself $10. And then with the $90 that I have left, then I can start managing my bills and doing everything else. So, okay, they're not able to, okay. So that's the way to think about it, right? So pay yourself first, and then with the money that you have left, then you start managing your bills, and then maybe you have extra more money that you can actually put into savings. I know there's a video that we can watch about savings.
Savings,
It's
shall we go to that video? Sure, no
Yeah, let's go
problem.
to that video.
Okay, ways to save on your monthly bills. All right.
There you go.
I think we have some questions.
Oh, okay.
Oh, I'm sorry. That was Mr. Adaro's information for the students.
Yeah. Pay attention to the video, guys, because then we're gonna be asking you questions about that, okay?
Finding ways to save money may be
you
easier than you
hear?
think. By setting aside just a few hours or an afternoon every now and then to do a little research on some
Can you hear, Christy?
Yeah, good.
Okay.
biggest monthly expenses, you may be able to save hundreds, maybe thousands of dollars a year. Here are some ideas to get you started saving on some of your bigger expenses, things like television, cell phones, utilities, and insurance. Almost everybody loves television, and it's no secret that services such as satellite or cable TV can be pricey. Thinking about how you use your TV could be a good way to start trimming expenses. For example, you may consider switching to antenna TV. The technology has come a long way since the days of bunny ears, and so has the quality of the picture. The FCC has an interactive map that shows which channels you might get in your zip code. Check out fcc.gov to find out more. Combining antenna TV with the occasional movie rental or an online streaming service, like those web-based services that have shows and movies that you can binge watch all weekend, might cost you a little bit up front, but it could save you hundreds of dollars over the course of a year. Now, if you decide to go with satellite or cable, shop around and negotiate. You may find a cheaper option, or your current provider may be willing to lower your monthly payment to keep you as a satisfied customer. A couple of phone calls could save you money each month. Speaking of phone calls, you may want to look at your cell phone plan to see if you can cut down on costs there too. Data and texting plans can be expensive, so make sure your plan reflects how much or how little you use your phone. You might also make some changes to your habits that could help you trim costs. If you use a smartphone, there are apps that allow you to track your data usage and even set alarms when you get close to a monthly limit. By avoiding large downloads on the go, you might be able to scale back your plan. Prepaid plans might also be a money-saving option. Or you might consider a family plan if you have more than one person in your household. Just remember, as with anything, pay attention to all the details of the plan when shopping around for deals. Finally, if you need to use a phone for your work, you might consider checking with your employer to see if they might cover your cell phone expenses. Or if you're self-employed, you might be able to get a tax deduction for your phone expenses. Next, let's look at housing. It's probably your biggest expense. If you rent, you might be able to ask your landlord about giving you a better deal when it's time to renew. Take a look at the going rate for similar apartments in your area to see if it makes sense to renegotiate. Most landlords don't want the vacancy that comes with the turnover, so if you've been a good tenant, they may be willing to work with you. And when it comes to household expenses, energy can be a big one, particularly if you're a homeowner. A programmable thermostat is one way you can save. They're relatively easy to install, and they can help you save significantly on your heating and cooling bill by raising and lowering the temperature automatically when you're not at home or when you're asleep. You can go one step further by getting an energy audit of your home. Your utility company may offer free energy audits that can give you valuable ideas on how to save on your energy bill that are specific to your home. You can start to find out more and get additional tips on saving energy from the Environmental Protection Agency's Energy Star website at energystar.gov. Another place you may be able to save big is on your insurance. Many people bundle their policies, such as homeowners and auto insurance, with one carrier. That can often bring substantial discounts. You might also cut some insurance costs by making upgrades to your home, like installing a security system. And if it's been a few years since you've shopped for insurance, you may want to shop around instead of just renewing. This can be particularly helpful on health insurance if you're responsible for buying your own insurance, since the prices of these plans change frequently. There are several websites where you can compare plans and prices, but pay attention to what the plan offers and the details, such as premiums, deductible amounts, and co-payments. The least expensive option may end up costing you more if it doesn't cover what you need. It may be hard to get started, but just a little bit of research and a couple of phone calls could make a big difference in your budget almost right away. And sure, spending an afternoon researching your monthly expenses may not be as thrilling as, say, a day at the beach, but rolling up your sleeves and doing some work on this may help you save hundreds, maybe thousands of dollars each year. That's money you might spend on a vacation at a beach.
Some good tips there. Any takeaways from that? Let's see. Let's tie it back to what we were talking about. Your income versus your expenses. So the key thing here is to keep your overhead low. So if you keep your living expenses low, you have more dispensable income. So, you know, if you want to buy something special, if you want to save, or if you want to go on vacation, maybe instead of, you know, just spending the weekend at the beach, you could actually go somewhere else, somewhere farther, you know, have a nicer vacation. If you just cut your everyday expenses a little bit here and there. I'll give you an example. I have my gym membership. So I have one that I can go to every gym and I can take a friend. But I don't have a friend that wants to go, and I always end up going to the same gym. So every month I'm paying $35. But if I get the most simple membership, which is to go just to the gym by my house, I would only pay $10. So how much money would I save there monthly? So little things here and there. Or if you have Netflix and you have Hulu and you have this and you have that, and maybe you're not even watching all of those, you're just watching one. So you sit down and you analyze your expenses, and you see, what am I spending money on already and where could I cut here and there? So let's see, anyone can give me any takeaways? Let's see who we haven't spoken to. Do we have Emily or Cynthia? No, they're not on?
Well, if you want to save more, then maybe instead of like, let's say you go out to eat like twice a week, just like instead of going out to eat to a fancy restaurant, maybe just get like a snack or something less expensive.
Yeah, that's, you know, that's a very good example, because I'll tell you, sometimes we go to a restaurant and we order with our eyes, right? Oh, because this appetizer, it looks so good, and then I'm gonna get my entree, and then I want to make sure that I have dessert. And then at the end of the dinner, you have all this food on the table that you didn't eat, and the bill comes and you're like, oh my God, how did I spend so much money? So if we really analyze things and we think of our pocket first and that thing that we really want to save for before we go and spend on everyday things, then we're going to always focus on keeping our overhead low. So keep your overhead low, your daily expenses to a minimum, so that you have more money in your pocket, which goes into the next thing. Remember, I talked to you guys about paying yourself first. So if your number one priority for yourself, you always should be, right? So then why is it that McDonald's is going to be a priority over myself, or Starbucks, or AT&T when I pay my cell phone bill? So the money that I receive, I pay myself first. I'm number one priority. And then I analyze my expenses. So an example that I have here, think of yourself, okay, let me pay myself 10% or 5% first. And then I'm going to go and analyze my expenses. Where could I cut here and there so that I can have more money to save? So getting into the savings conversation, remember that we talked about that. That money is money that I don't want to see. I'm going to pretend that it's not there. So then let's say for graduation, I want to do something special and my parents are throwing me this graduation party, but I want to go out and do something with my friends. So maybe you have extra money, and instead of just going out twice a week or once a week, then I'm going to go out twice a month. So then I can actually afford to do something big, you know? So you think of it that way. And then once you get into that habit of saving, even that special something that you thought you wanted to do, you might think about it a little bit more and say, hey, maybe I'm just going to keep saving this money. Maybe I want to go on a big vacation, because you're creating that habit for yourself of making yourself number one priority so that you have that financial stability in the future. Okay, let's go to the next slide. All right, so this one is super important. This one is actually one of the most important things that you're going to learn in life. And you're going to see that once you understand the importance of building your credit, sometimes having good credit is more important than having money. So credit, what it is basically how you build a name for yourself. So you're telling these institutions, you know, I'm a good person, I'm a responsible person, I know how to manage my money. So whatever you lend me, you're guaranteed that I'm going to pay you back, because I'm smart. I know how to do things, you know? So instead of overspending and borrowing money from you that I can't pay you back, I'm going to create a good history with you as a bank so that you trust me with your money. So there's a video that we can watch about credit, right, Tanya? I think it's the last one.
Okay, how to build credit from scratch. Okay.
Yeah, let's do that. And then we're gonna go into the details of that.
How do I build credit from scratch? Building your credit for the first time can feel a little like the chicken and the egg. To build a good credit score, you're going to need to take out a loan or get a credit card. But you can't qualify for a loan or get a credit card without some credit history, right? So what do? Let's start with a bank account. You don't really need a long credit history to open a checking account at your local bank. In fact, you may have one already. Even though a checking account won't necessarily help you build credit history with the bureaus, that account may help you get your first credit card or loan from the same provider. You see, if you already have a history of doing good business with the bank, they know you and value that business. That existing relationship can carry some weight when it comes time to get your first line of credit. That is a good first step, but if that's still not enough, here are a few other things to consider. Some banks offer credit cards for folks who want to establish, strengthen, or even rebuild their credit. It's called a secured credit card because you secure the amount you borrow with a security deposit. In other words, you provide collateral by depositing money in an account with the bank, something the lender gets to apply a portion of, or all, should you default on the loan. Your credit line is equal to the amount you deposit. You won't be able to touch that money or use it to pay off your balance, and you'll still have to prove to the bank that you have sufficient income to pay the credit card. The good news is that the bank will be more confident that you'll pay them back, even without great credit, allowing you to build or rebuild your credit. Since you'll be using your first card to build your credit, you want to make sure that, once active, your lender will report all those on-time payments to the bureaus before you apply. Most banks and credit unions do this, but some retail store cards, for example, don't. So make sure to check ahead of time, and if your payment history won't be reported by the card issuer, you may want to keep shopping for a card. Also, don't apply for a bunch of different cards if you keep striking out. All those hard inquiries and declines aren't going to help you build a score. Keep in mind, a secured card is different from a prepaid card. A prepaid card allows you to load the card with a cash amount ahead of time to spend later. Prepaid cards are great for people who need a Visa or MasterCard to make a purchase, and can be a terrific gift idea. But they won't help establish credit. Another way to build credit is to see if there's someone who might be willing to co-sign a loan with you. This can be any adult who is credit-worthy, including your parents or spouse. When someone co-signs a loan, you get the benefit of their good credit history, and this may help you get approved. You can then build your own credit with a good history of payment on the co-signed account. Now, whoever co-signs the loan for you is taking on a really big financial responsibility. They'll be on the hook for the debt if you run into trouble, so it's not something you should ask for lightly. When you do get credit extended to you, it's important to keep managing it carefully, even after you've built a history. You're doing the right thing by getting off on the right foot. Now make sure you keep those good habits the rest of your credit life. This will help you build a long, positive credit history that will eventually result in a really good credit score.
At what age should I apply for my first credit card? Well, that's a good question. By law, you have to be 18. Okay, so let's talk about some of the things that were discussed on the video. So first of all, who can tell me what credit is? What do you think credit is? Okay, let's see if we can find some volunteers. Give me a second. Okay, who haven't we called on? Let's see. Carlos, are you there? Or Alyssa? No? Okay, well, credit is the ability to obtain goods and services before a payment. So the financial institution gives you a loan or gives you a line of credit. So there's two types of credit, a loan or a line of credit. Based on that money that you're borrowing, then you can buy whatever you want and you can pay them back. So You have your installment loans that you would get, for example, to buy a house or to buy a car. So what that means is that you get a lump sum. So the bank gives you, let's say, $10,000. And then they tell you, you have to pay me back in 5 years. So they give you a fixed monthly payment to get that big purchase that you wanted. So those are your installment loans. And then you have your credit cards. A credit card is a revolving line of credit. So it's a revolving door. So the bank gives you a card with the ability to spend up to $1,000. That doesn't mean you're going to go and spend $1,000. That means that you're going to spend whatever you need, let's say $100, and then you get a bill and you pay it back. And then once you pay that back, then that money becomes as available credit all over again. So it's revolving, the concept of a revolving door, okay? So credit, like I mentioned before, is extremely important because that's basically like your transcripts at school. So you know how you get a grade in school and then you get transcripts, and then when you apply for college, they're gonna see, okay, well, what type of student was this person? What grades did they get? That really shows the college how responsible you were. So it's the same concept as you go into adulthood. Instead of having grades or having transcripts, you have a credit score. So that credit score and that credit history is basically what tells financial institutions how responsible you are and how well you know how to manage your money. And then that opens the doors for you to be able to get credit. So the pros and cons of borrowing money. The first thing and the best advice that I can give you is always build your credit when you don't need it. So don't wait to build your credit until you need to finance that car or until you need to finance what part of taking out a car loan? Okay, don't wait to apply for credit till you need it. So basically, when you're gonna get a car, you're applying for a car loan. So the car is basically the guarantee that the bank has to be able to make sure that you're going to pay them back, because if you don't pay them, then they're gonna take away that car. So when you're gonna go and buy that car, the first thing that you wanna do is make sure that you already built your credit history. So that's what we're talking about now. So if I build my credit history, I'm telling the bank I'm a responsible person. The bank is gonna lend me money, but they're gonna lend me money and not charge me an arm and a leg for it. Because if I go in with no credit history, then I'm going to end up paying a higher rate. And I might be driving, let's say a Dodge, and I'm really paying for a BMW, you know, because the interest rate can be so high. So the pros of borrowing money: building your credit history, showing that you're responsible so that you're prepared whenever you need to go ahead and make a bigger purchase. And then you have the cons. The cons would be depending on you. So if you're applying for credit and you know that you're spending on a really nice blouse or on a dinner and you really couldn't afford to pay it, then what's going to happen? That record could decline, because once you get that bill, you might not be able to pay it. So that credit report and your credit scores is what's most important. And it's showing how you are dealing with that responsibility on a day-to-day basis. Questions about credit scores or building your credit? This is really important, guys. And you're gonna see, you don't wanna learn later on when you make a mistake. So ask questions now.
Christy, can I just mention,
Yes.
are you gonna do the worksheets? What's the situation with that? Mr. Adao, what do you think? I know that it's a PDF, or do you want to wait for the next lesson? What do you think?
The worksheets are posted on Teams and they're accessible through the files. Tatiana, were you able to, Tatiana's here with me. I gave her a hard copy.
Yeah,
Cynthia, Alyssa, were you guys able to do them at home? Can you guys access from your computers from home? Were you able to type into the text box?
You can't type it when it's in the PDF.
yeah, it doesn't.
Yeah, I saw one of the comments there that said that they weren't able to really use them.
Yeah, I believe the way, like, I don't know if you can adjust it. If you gotta have the program Adobe Acrobat to go ahead and put on a cell box. So you can do them that way. If not, we can work on them later. I know if you access, this is a tip for everybody, by the way. I know we're giving financial tips. I'm gonna give you a PDF tip. So you can go ahead and access PDF Escape. It's a website. It's free. There's a free version. It's not something you gotta pay for. And you can put in text boxes there, guys. And I'm talking to the students. You can put text boxes there and you can just fill them out, and you can turn them in to me, today or by the end of the week is fine too.
What about the option to select the fill and sign function? That's what Nadir had mentioned. Would that work?
Yeah, Tatiana, how did that work out? Were you able to sign and fill it out?
No. No, I couldn't. I think the sign function is only like with certain things or certain PDFs, but it didn't work for me.
But Tatiana, do you have a Mac?
Yeah.
Yeah, so maybe I don't know, maybe there's a difference there between a
Yeah,
Mac
maybe
and
it's a computer thing that it depends, but I did one worksheet, so I'm doing the other one.
Okay.
okay.
All right. Well, another option is if you have the ability to print, you know, but if not, then we'll work it out with Mr. Adao. Okay. Christy, I just wanted to let you know that with the PDFs, if you wanted to do the worksheets, I guess we'll keep you posted on that for the kids. Okay.
Okay, perfect.
Okay.
So what slide are we at? So credit
Reports and-
report and credit scores. Okay. So your credit report is a snapshot of your financial life, and it may be accessed by anyone, including potential landlords or even if you're applying for a job. So nowadays, I'll tell you, credit is so important that even when you apply for a job, sometimes they can pull your credit. So you have to give them permission to do so. But what I want you to understand is that it's not just when you're applying for credit that it's important, but it's really in so many functions in your life that this is going to be the most relevant. It's like a resume of who you are. So your credit report is a snapshot of your financial life, and it may be accessed by anyone, including even if you rent, potential landlords and employers to lenders. Your credit score is based on your credit report. So it's like the grade that you get at school. So some of the things that factor into that credit score, you have 35% is payment history, 30% is amounts owed. So let me give you an example on that. First thing, you have to pay your bills on time, right? So that covers your payment history. I think that's in the next slide. In the do's and don'ts.
That's building credit, this one?
Let's go to the one that says do's and don'ts, that one, perfect. So when we talk about your credit score, and like I was mentioning, there's a lot of things that go into play with that. So the first thing is your payment history. So do pay your bills on time. That's like the most important thing. You want to make sure that you pay your bills on time. And with credit cards, I would tell you, like I mentioned before, since now you're using this as a tool to build your credit, then what you would want to do is only spend on your credit cards the amount that you can pay back. So try to pay the amount in full, and then that way you avoid paying interest. 15% is length of your credit history. So how long have you had credit? So if let's say we look at a person that has a 700 credit score, which is high. Credit scores are anywhere between 300 to 850. So let's say this person has 700 credit score. But really, it's because they've only had one credit card. They've managed it well, and they've had it for 6 months. Is that a really strong credit score? Who can answer that for me? Okay, let's see. Cynthia, Carlos, Crystal, no?
Cynthia, why don't you take that question, Cynthia?
It would be a good credit score, right?
It would be a good credit score because it's 700, right? So you're on the high end. Now, if the credit history has only been for, let's say 6 months, do you think that's going to help somebody qualify, let's say for a mortgage to buy a house?
I don't know. I don't know.
Well, that's good that you don't know. And I'm glad that you're honest and that you say it, because most people don't know. See, what happens is that your credit is not just a score, right? So it's your overall history. How long have you had credit? How much do you owe? So if I have a credit card that's $1,000 and I owe $100, then that means really I'm not overspending. I'm not using that much. But if my credit limit is 1,000 and I'm using 999, like, what does that say of me? You know, so you have to think of it like as a behavior grade type of thing, you know? Then 10% is the types of credit you use. So we talked about revolving credit, and installment loans, right? And then 10% is new credit. So all of those things go into play to give you your credit score. So the things that you shouldn't do is use all your credit. So the bank gave you $1,000 to spend and you're at 999. Is that a good thing? No, right, Tatiana? Okay, so close unused account. So this account, I'm not using it, but it's really my first credit card and I've had it for so long. So is it a good idea to close it, especially if the bank is not charging me any fees? Might not be a good idea, because remember, one of the main things that goes into your score is how long you've had these accounts, or applying for too many credit cards. Now, this happened to me when I was very young, because regardless of what store you go to, when you go and you pay for your items, they're gonna ask you, hey, do you have our credit card? We can give you a discount. So if I constantly apply, those are inquiries on your credit and it doesn't really help. So remember to take care of your credit. Only apply for what you need. So if you're going to use one credit card, or if you're going to use two, make sure that it's enough so that you can manage, but you're not overextending yourself. So that's the main thing with your credit. So let's go into using credit card wisely, which is the next one. I think we only have 10 minutes, right, Tanya?
Until 10:34. Unless Alex, Mr. Adar, did you want to end a few minutes early for dismissal? What did you want to do?
I'm flexible, whatever. We can do it to 10:34, 10:30, that's fine.
Okay, Christy, it's up to you.
Okay, yeah, we just have like maybe 2 more things to cover, and then we'll go into financial security, which is very important, especially now. Okay, so using your credit card wisely, right? So $500, and you only pay $15 a month. Okay, so this is how it works. The bank's gonna give you a credit card. You're the one that manages the credit card, and you're going to tell us how much you're going to pay us, because we're just going to tell you this is your minimum. So you have a credit card for $500, and the bank tells you, okay, well, you only need to pay us $15 a month. Now, what happens is that we're charging you interest. So we're charging you for using that credit card. So if it takes you 3.5 years to pay back that card, you're not really paying back 500, you're paying back much more because it took you that long. Now, if that same credit card, you use it, and let's say you spend 200 on that card for that month and you pay back the 200, then really you're not paying the bank anything for using it. You're just basically using a tool to build your credit and to establish a payment history, but you're not wasting your money paying interest. And it's more money that you can have in your pocket to save and to buy something special. So using your credit card wisely, don't pay the minimum payments. Always pay more. Pay as much as you can so that you have the availability to keep using the credit card, and you can still build a strong payment history, and you're saving money on interest. So the next example, if you scroll up a little bit, 3,000, okay? So this would be a loan. So if you have a loan, and let's say you're paying, the loan is for $3,000, and you have a fixed monthly payment, you also have a fixed term. So we tell you, okay, you're gonna pay us $65 a month over 17 years, okay? So over that period of time, you ended up paying us $3,000 in interest. So you're paying double for the amount that you borrowed because it took so long to pay it back. But if instead of just going by the 17 years, if you pay it back in a year and 5 months, it gives you in the example, by paying $200 a month for that $3,000 loan, you're able to pay it off in a year and 5 months. So instead of paying $3,000 in interest, you're paying $317. So the key thing to remember is the longer that you borrow this money, the more that you're going to pay the bank in interest. So the less money that you're going to have in your pocket and that you're giving to us. So the smarter thing to do, the wiser thing to do is, yes, go ahead and borrow money, but try to pay it back as soon as possible so that you're saving on interest. So that you're using the bank to work for you. And you're going to see many successful people, instead of using the money that they have in the savings account, they use the tools that the bank gives them and the loans that the bank gives them, so they can buy what they need and then pay it back and not tap into their savings. So you want to put yourself in a position where you can definitely do that. Any questions so far? We talked about the pros and cons of borrowing money. So as long as you borrow money responsibly, you know you're good to go, and it's only going to benefit you. But if you're borrowing more than what you should, then you're putting yourself in a pickle. So we don't want to do that. We talked about how to build your credit and how your credit score works. That's very important. Don't just go by what I'm telling you. After this, you can look it up online, go to Better Money Habits, so you can use your resources to find more. How to build good credit. Don't go applying everywhere, application crazy. That's like the last thing you want to do, because then there's all these inquiries on your credit and it lowers the score that you don't even have. And then the do's and don'ts of using credit and using credit wisely. I know you guys have to have questions, because this is the one more, I think this is the most important chapter that we're going to cover. And it's actually the last one. So a couple of questions will be good. Let's see who's there. I'm not going to pick on Tatiana anymore. Is Alex there?
I'm here and I have a question. I don't know if you have the answers. A little bit off topic.
Okay.
I just wanted to know, because I mean, we did mention retirement and 401.
Okay.
So we do some investing, and I just wanted to know what is maybe the future of banking and cryptocurrencies. I don't know if you have that answer. I know it's a hard question, but is the banking system ever going to change the cryptocurrencies, or is that something you should invest for retirement, or are they going to start offering that in 401ks?
That's not
Hey,
something that
Christy,
I love the question, because that's what we're going into, you know, and I'm telling you that especially younger people, they walk into the bank all the time and they're telling me all these things that I don't know, and everyone's investing. So that's a very important question as far, but I really wouldn't be able to answer that for you. What I can tell you, and the advice that I can give you, is that starting your 401k, and if your job doesn't offer it, starting your retirement account early is the key to life. And you would actually see how people leave that as a last priority because you're young and what's the point. But if you see how long people are living, the more that you save from the time that you're young, the more successful that you're going to be, you know. And whatever you do, whether it's investing that money or just putting it in savings or doing Bitcoin or cryptocurrency, whatever it is that you decide to do, just do it, you know, pay yourself first and make that a priority. But I wouldn't be able to answer that for you, unfortunately.
Hey, Christy, I think I can help you support.
Okay.
I can support you with that for Alex. So just to jump in real quick. Hello, everybody. My name is Nadir Lamri. I work with the bank as well. I was just kind of in listening mode the whole time. But just to answer the question, cryptocurrencies obviously have a future in the banking space. We see reports of Chase now has a Morgan coin or something to that effect. Bank of America has the highest number of patents on cryptocurrencies or crypto related currencies internally, or crypto technology rather, blockchain specific than any other bank out there. So there is definitely a big push in the investment community to work on some type of a blockchain or some form of crypto. Now, when it comes to Bitcoin and the altcoins, they are highly speculative assets. I would not say, and I'm not an investment advisor, so please speak to an investment professional for further guidance, but I would not say that they are plans for retirement with the amount of volatility that they experience, and they don't have enough history for us to consider them for something that's such a long range. They've only been out for about a decade now, but it is something that is obviously being looked at. It's becoming a part of some portfolios, especially highly speculative, highly funded portfolios. But if you're looking for something basic, just to kind of get yourself to retirement, kind of a traditional avenue, I would definitely suggest taking a look at 401ks, IRAs, you know, something a bit like what Christy was mentioning earlier, instead of stepping into something as speculative as crypto.
Yeah. Thank you, Nadir. Any other questions? Our time is almost up. Okay, so the next slide, Tanya, is keeping your information safe. Let's go to that one. So we just cover that briefly. We already went through that. Okay, so we all live in Miami, right? And in Miami, unfortunately, it's a beautiful city. I love it here, but there is a high level of fraud, financial fraud, and we see it every day. So back to the beginning, we said that the financial institution is the bank that holds your funds, but you are responsible for managing your account. And part of managing your account is keeping your information safe. So how do we do that? Who can tell me some ways that we could keep your money safe, that you could do your part in keeping your money safe? Alyssa?
Yes, can you repeat the question?
Yes. What are some things that you yourself could do to make sure that your money is safe with the bank?
This might answer your question. The official currency of the United States is the United
Sorry,
States dollar.
Alexa wants to answer. Go ahead.
You like keep your passwords
The
and
noun answer is usually defined as a spoken or written reply or response to.
if you don't keep your passwords on your phone, maybe you can protect it better.
Okay, perfect. That's a really good one. So, you know, the most important thing is to keep your information confidential. So it's not something that you want to share your banking information with your friends. Your PIN number should be memorized. Don't write it down. So many people make that mistake where they keep the PIN number in their wallet along with their card. So it's like, it's really giving someone else your money right away. Using strong passwords, don't share your passwords. So I used to have the same password for everything, and everyone knew my password because it was so obvious until someone hacked into my account. So don't do that. Make sure that you use something that's strong and you change it from time to time. Make sure that you don't share so much information online. You know, I see it all the time. Actually, my son did this, and he was grounded after that. Oh, I have my first account, and he shows his debit card. I'm like, what are you doing? There you go. We need to go get a new debit card, you know, so things like that. Like, you definitely don't want to do that. So keep your information safe. The technology up to date. Don't share your information. It's no one's business what your PIN number is. If you tell your friend, oh, can you please go and withdraw $20 for me while I do this? No, not even $20, you know? So that's your responsibility, is to keep your information safe, because the bank is going to safeguard your funds. And if someone taps into your account, or if you have fraud, we're going to be responsible. But there's an investigation process where we have to make sure that you're abiding by the rules of the bank, which is keeping your information confidential. Only you manage your account, or whoever's on the account with you. So as long as you do your part, you're going to be fine. But all of those things are extremely important, because we all work very hard for our money. So we want to make sure that if it's going to be spent, it's going to be us that's spending and not someone else, you know? Any questions about that?
There's a question on the chat. How safe is it using a public network for banking?
I'm sorry?
How safe is it using a public network for banking?
Well, it is. I'll tell you, like, any network is really safe for using it because of the safeguards that the bank has on their website. So the bank has certain safeguards on their website, but you definitely want to make sure that you're using a device that you trust, you know, because you can always be exposed to fraud. Right? Like nowadays, the different types of fraud that we see, we don't even know how it's done. So use a device that you trust. But the open network thing, I think it's fine. I mean, we do it all the time, but as long as you keep your password safe and you're using the bank websites. Now, what isn't safe is responding to emails. That I'll tell you. You'll get an email from the bank and it tells you, it looks exactly like the Bank of America or Wells Fargo emails. And it tells you, click on this link because you need to change your password. You click on the link and you're sharing your information with them. That's one of the main ways that there is fraud nowadays, because you're basically giving them everything that they need to actually go into the legitimate website and access your account. So don't fall for those phishing emails. They happen all the time. Text messages also, you get random text messages. Oh, so we need to update your information. Click on this link. That's something that you don't want to do. And whenever in doubt, always call the bank. We'll be glad to help you.
Perfect.
Any other questions?
Will the bank actually ever email you? Because there's some websites that do that to scam. But
Yeah.
like when you actually go to the actual company, they don't even send emails or anything. So do the bank ever like actually email you?
Yes, the bank will email you. They'll definitely email you for different reasons, but the difference is that they're not going to attach a link to that email for you to enter your password information. So I'll give you an example. Like we email our customers all the time to give them our information so they can schedule an appointment to come and see us. But the link is only to schedule the appointment. The link would never be, okay, enter your password and your username so we can go into your account. So that's the big difference. But like I said before, whenever in doubt, because they really do look legitimate, call the bank. Call the bank and find out. But yes, the bank will definitely email you. We will never ask you for your PIN number for your debit card or your password for your online banking. That's confidential, just for you. So I think our time is up. Thank you so much, guys, and thank you for the participation. It's been fun, and I hope you learned something from it. And do your follow-up. Make sure that you look up the resources, and it doesn't end here. Thank